As per Bajaj Finance Q2 update, the company rather witnessed a tepid loan growth during Q2 with no new loans booked standing at about 36 lakhs versus 65 lakhs on the previous year. Having said that, the things did improve on a sequential basis slightly. Well, talking about the company's AUM, it witnessed a mere growth of just about 1.3% on a YY basis and rather a decline of just about 0.5% on a sequential basis. So the company's AUM growth did slow down during this quarter. Usually the expectations when it comes to Bajaj Finance is high, and given the current scenario, the company is pretty much cautious, and this is reflective in the kind of update the company gave for its Q2 performance. Well, having said that, ET Now poll sees the net interest income to witness a slight growth of about 3.7% on a YY basis to nearly 4,149 crore rupees, while the PAT is expected to come at around 1,037 crore rupees, witnessing rather degrowth of 31% on a YY basis. So definitely to an extent profitability would be impacted due to the higher provisioning that the company would take. In the Q2 update, the company mentioned and guided at accelerated provisioning for COVID-19 in Q2 FY21 as well, given their looking to further strengthen their balance sheet. Sanjeev Bajaj in his previous interaction with us mentioned that they'll remain conservative when it comes to provisioning and lending also. Well, the cautious stance on lending is given that certain business segments on the unsecured side are still vulnerable. So given the entire COVID scenario and the uncertainty revolving this pandemic, the company is pretty cautious when it comes to lending. In fact, the management has guided for another quarter of accelerated credit costs, and this is something that is going to definitely impact the margins as well. In terms of management commentary, we are looking at comments on resumption on the business demand recovery. Also, has there been a sequential improvement in disbursements? It's something that we'll be watching out for. Also, an update on collections and conversion to flexi loans, given this was something that was done in Q1 FY21. So what's the update and conversions to flexi loans in Q2 FY21 is an important aspect to look out for. The company, what is the kind of trends that the company is seeing when it comes to asset quality, and could there be some amount of uptick in NPAs, and the outlook on funding costs and margins. So we expect the growth to moderate for Bajaj Finance. Nevertheless, the company remains well capitalized, and the liquidity position also remains pretty strong and robust. In fact, the company as of now is sitting at an all-time high liquidity buffer of 22,300 odd crore rupees. So the company is conservative, but the outlook going forward and the uptick in demand is something that we'll have to watch out from the management commentary.